Welcome to the My Money, My Lifestyle podcast, where we discuss all things money because whether or not we like it, money matters. I'm your host, Maya Fisher-French. Now, I'm a freelancer myself, so I'm always keen to hear from tax experts about how to manage my freelance income. So I know that for those of you who are listening who are freelancing, now maybe it's a full-time thing for you or a side gig, this show, which is really a tax 101 for freelancers, is going to be full of useful information. And joining me today, I have not one, but two tax experts from tax consulting firm BDO South Africa. So first of all, welcome, Kagiso Nonyane.
Thank you, Maya. Thank you so much for having me today.
And I have Dumisa Sihawu.
Hi, Maya. Thank you for having us.
Fantastic. Welcome to both of you. I want to start off. Let's just assume people listening know very little about how tax works for freelancers. So let's start with the basics. You're going to freelance, whatever it is. You may be a graphic designer, you may be a writer, whatever it is. So you are lucky enough to get a client. You do some work for them, and then invariably they ask you for your tax number and other documents. And then sometimes you get taxed before you get paid, and sometimes not. Dumisa, let's start off with that. Let's kick off with explaining why tax may be deducted, what that percentage is, why it's that percentage, and also explain to me what a tax directive is.
Yes, thank you, Maya, for that question, because it's very important, because at times we tend to think that if I decide I'm going to be a freelancer, I can get away from all the nitty-gritties of PAYE and everything else. But unfortunately, when it comes to South Africa, there is specific law that governs the relationship between a client and the service provider. And the law says that you look just outside the relationship on paper, but you look at the actual relationship, which is the form of the relationship. So what it says is that if this person, you didn't have this name of a freelancer, would this person be deemed an employee if you did not have all this arrangement to call them a freelancer? So what it means is that you need to make a determination in that, is this person really independent of your work? Meaning that if, for an example, I am Dumisa and I'm commissioning a Maya to come and be an MC at my event, Maya can do events wherever she wants. But if I'm a broadcaster and I have to have MCs that I have to send for my business to strive, therefore Maya cannot be a freelancer to me, because she forms an integral part of my business. It means she might be an employee, and therefore you need to look at the relationship. And therefore you need to take out the contract and look at the true relationship, in that if we take out all the contracting, would this person be deemed to be an employee? Do I control the person? Do I give supervision? Do I supervise and control as to the manner of work and the hours? And that is very important. And what the law says is that the client, the person that pays the invoice, has to make that determination, in that you need to look at everyone you are paying. You must make sure that they are indeed independent, and therefore they can qualify as a freelancer, which means they can just invoice you and you can just pay them on invoice. However, if the independent test is not passed and the person forms an integral part of your business, you supervise and control them, they are deemed only for the purposes of withholding PAYE. They would be deemed to be an employee. It does not mean that from a labor law perspective, etc., that they are your employee, but from just withholding employees' tax, they would be deemed to be an employee for that purpose. This is why you would see people then saying, can I have your tax number so that I can deduct PAYE from you, because you form an integral part of my business. I supervise and control you as to the manner and the hours that you work. That is very, very important, because the determination is not on the freelancer, is on the client that actually pays, because SARS will ultimately go after the client.
So now I'll give you a good example. My son does acting work. You know, they get called in to do adverts or whatever, and they always deduct 25% from his income for tax purposes. What is that 25% that they're deducting? Is it PAYE? Is it, what is that number?
Yes, so that is definitely PAYE. So what then happened is that we had there was a whole lot of freelancers. When it came to them paying taxes, they didn't have the amount to pay over to SARS. And SARS then put in a rule and said that if you have these individuals that you call on a regular basis, but they're not really your employees, they are called non-standard employment. But from time to time, I have a Maya to call on if I need this acting job done, and they are on my books that I will call on them. Then SARS said you can deduct 25% because that is normally the average that a person would then pay as a final tax. But this tax effectively means that when they do their own tax return, they will say, yes, I've earned this money and I've already had this PAYE deducted as non-standard employment because I don't work more than 20 hours a week for this person. But then it helps them when they have to do their tax return. It says, I've already paid this much tax. But if these individuals are actually in a lower tax bracket or they've got more expenses, they will actually get that tax back. But it essentially means that they do not end up in a situation where they owe SARS taxes, because that gets a bit nasty because there are the penalties and interest that get accumulated, and this is what gets people into trouble.
My son doesn't earn enough from it to actually hit the tax threshold, so he always gets a refund, and he gets upset, you see, because he sees he's going to get paid this amount and then he gets paid less, and I always tell him it's forced savings, you see, and then, at the end of the year, when your tax returns in, you'll get a refund, and that'll be your forced savings. So I try and make it a little more pleasant for him. But maybe if you can, within this context, explain what a tax directive is then.
So what a tax directive does is, if, for an example, I earn R1 million, and according to the South African tax tables, it says my tax should be 40%. And because you, Maya, have employed me, and you do not know what expenses I'm incurring because I'm a freelancer, and you decide to deduct 25%. But according to what I earn, and according to my expenses, I do have deductions that will actually mean that my actual tax rate is 18%. Then you can go to SARS and say, according to my last tax return and what I have earned, I am in the 18% bracket. And then you can go to SARS and get a tax directive to say, yes, according to what you know of the person and what they have been earning and their average expenses, you must only deduct 18%, not the 25%. But ultimately, at the end of the year, they have to justify that they're actually still in this year, which is the current year, they are still in the 18%. But they use the previous year's income and expenses as an average.
Okay, that's very useful to know. So if your average tax rate is less than 25%, it is worthwhile going and getting that tax directive. Not, I think, hopefully you're earning enough as a freelancer to be in the 25%. I think sometimes a tax problem is a good thing. But another question I have for you is, when should a freelancer register as a provisional taxpayer? Are they automatically provisional taxpayers? Maybe explain that as well.
As a freelancer, and if you're not paying any PAYE, according to our laws, then the only time you have to pay taxes is every 6 months. Therefore, it makes you a provisional taxpayer. So the moment you are a freelancer in the true sense and there's no PAYE being held, then SARS says you actually have to pay taxes every 6 months, just like a company does, because you are seen to be conducting an enterprise and a business, and therefore every 6 months you need to account for whatever you've earned. Doesn't necessarily mean that you have to pay taxes every 6 months. You may have made a loss, but every 6 months you have to submit a provisional tax return, and if there's amount owing, you have to pay taxes every 6 months. And it is very, very important in that by the end of Feb, you need to at least be within 80 or 90% accurate of what you've earned, because there can be additional interest and penalties, because SARS says that you are submitting this at the end of Feb, which is the end of the tax year. You really, really need to know what you've earned for the year. And therefore, if you are not accurate at least by 80% or 90%, depending on whether you earn more than R1 million, if you earn less than $1 million, you are allowed to be at 80% accuracy. If you earn more than 90%, you need to be at a 90% accuracy.
You'd need to be at 90%.
Yeah.
Yeah. Okay.
90%, yes.
Okay.
So that's exactly what it means, is that you just need to pay taxes every 6 months.
Okay, also really important. Now, talking about paying tax every 6 months, nobody wants to pay more tax than they need to. We're not talking about tax avoidance here. We're talking about making sure you're not overpaying on tax. So what tax deductions can a freelancer make from their income? What is kind of acceptable that's not going to get you scrutinized by some?
So what our law says is that for you to earn the income, you definitely have to incur expenses. So any expenses that are incurred in the production of that income. So for an example, if I am an actor and you have to call me and I have to go to Sandton and I live in Pretoria, I have to take a taxi and there's certain things I have to do. I have to upskill myself and take acting classes. Those things are enabling me to be able to earn the income, because if I'm not up to date with the standards, with what I need to do, I then will not be able to earn the income. So any expenses that are directly linked to me earning that income, those expenses are tax deductible from an income tax perspective. And at this point in time, I would like to bring also Kagiso, because over and above that, there is also what we call VAT. I know we haven't introduced it, but on deductibility, I think on this importance in deductions, also VAT is important.
I mean, I'm glad you've raised that, Kagiso, and I want to bring you in on that, because I think that's, very, 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 very key. So yes, Kagiso, we'll get on to the next question a little later. When do you need to register for VAT? Let's say you are VAT registered. How does that work in terms of tax deductions?
So for VAT purposes, it's likely almost the same as for income tax. So to the extent that supplier B has levied VAT on whatever you bought, let's say you're a freelancer and you had to buy a camera. So you're using that camera in the course and furtherance of your enterprise being photography. So that expense was incurred in order for you to give whatever services, and those services constitute taxable supplies. Then you can offset that input tax against your output tax. So what you would levy as a VAT vendor is what we call output tax. So you then offset your output tax that you're supposed to account to SARS against your input tax, which is what you claim against the expenses that you've incurred in the course and furtherance of your enterprise. However, it's also important to note that it's not a clean-cut one where you can claim on all expenses. There are certain exceptions. For example, you cannot claim on things that are deemed entertainment. Entertainment usually constitutes things like drinks and beverages. So if you want to go to a restaurant and indulge as much as you can, unfortunately, those are some of the expenses which the VAT Act would prohibit as an input tax deduction.
That's a good one.
And Maya, and just on that entertainment, from an income tax perspective, you actually are allowed to deduct it from an income tax perspective. So you will lose out on the VAT, but from an income tax perspective, whatever you've paid at a restaurant, let's say your bill is 1,000 rands, but because of 15% VAT, it's now got 15%. But that total amount, you can deduct it against your income, because now for me to be able to have Maya calling on me all the time, I have to entertain Maya. So that full
you
amount
do, and I'm expensive, Dumisa. I only like the top restaurant.
You think 1,000 rands is not enough?
The other exception on entertainment for VAT purposes is if you're in the business of providing entertainment. So example, if you're in the business of selling food, obviously that's your course and furtherance, or that's your enterprise. So that would be the exception to enterprise. So it's very important for one to mainly identify what their enterprise is, identify what the exceptions are, so that you know that you're claiming, on the right expenses. Otherwise, you find yourself in trouble with SARS, where you've actually overclaimed on disallowed expenses.
And I know SARS is very scrutinized as VAT a lot, because that's obviously where a lot of the fraud comes. But Kagiso, I want to go back to that example of a camera. And what if you're not VAT registered? So say the camera with VAT is 10,000 Rand. That full 10,000 Rand even if you're not VAT registered, you could obviously deduct from income. Am I correct? Would that be?
I think Dumisa can answer
Maybe
to that. For VAT purposes, it would only be on the percentage that the camera provider levied VAT. So let's say the camera was 100 and they charged 15 Rand for the VAT. So you would offset 15 Rand from your output tax. Let's say from the work that you rendered, you had to pay 20 Rand to SARS. So you'd say the 20 less the 15, and you ultimately then have to pay 5 Rand over to SARS.
But if the camera is 100, including that, you could deduct, and you're not VAT registered, you would deduct the full 100 from your income tax.
Yeah. So from a tax perspective, which is income tax, what it says is that any expenses that you've incurred in the furtherance of the trade is tax deductible, and therefore, so if you're not a VAT vendor, you will then only be allowed to claim the 100 Rand, which is the actual cost, because VAT is a tax. So the thing that hence it comes to, do you want to voluntarily register for VAT because you're going to be incurring expenses that have VAT? Because VAT says if you earn R1 million in any 12-month period, it's compulsory that you must register for VAT. But if, as a freelancer, you anticipate that because of the work that I am in and the expenses that I am going to incur, it will be beneficial for you to actually register for VAT, even if you are below the threshold of R1 million, because you are going to be incurring expenses that would actually attract VAT.
Kagiso, maybe a good one for you. I mean, so just explain a little bit for our listeners when you do have to register for VAT, and when is it worth being voluntarily registering for that?
So Dumisa actually already pointed out a very important explanation about determining whether you're an employer or an employee. So for VAT purposes, you're required to register for VAT if your taxable supplies being if it's goods or your services that you provide exceed R1 million in a 12-month period. Now, the definition of enterprise specifically excludes an employee, and this is why it's then supposed to be read together with the income tax, which is what Dumisa started with. So you can't say I qualify as an employee, but I also qualify as a VAT vendor. So it has to be one or the other. So to the extent that your taxable supplies exceed R1 million, then you have what we call a compulsory VAT registration, and you would need to register for VAT, meaning going forward, you now have to levy VAT on the invoices that you issue, and you have to account for the output tax. There's also compulsory registration. With compulsory registration, that's when you meet a threshold of 50,000 Rand in a 12-month period. And obviously, whether there are benefits or not of registering for VAT on a compulsory basis and not, on a voluntary basis and not on a compulsory basis is really dependent on the type of business that you have. So for some freelancers, it could be, well, I'm actually incurring quite a lot of expenses where VAT has been levied, and there would be a benefit in me being able to offset my output tax onto the input tax. So that would be one of them. The other disadvantage would be really, you have to consider, am I really ready for the administrative burden that comes with it as well, because you constantly have to issue invoices. You then also have to account for the VAT. So that means you have to submit your returns as well. And sometimes with VAT, it's either on a monthly basis, bi-monthly basis. Even if in periods where you haven't made any taxable supplies, you're still required to actually submit nil returns to SARS. So it can be quite burdensome on a taxpayer. This is why you need to consider what your business needs are and whether it would be feasible or beneficial for your business to register for VAT.
And would your end user also matter? I think if you are freelancing into a corporate, which is VAT registered, they're not really bothered if you've added 15% onto your bill, because it's an offset for them. But if your end user is a consumer who's not VAT vended, then you're just simply making your costs 15% more expensive for them.
Exactly.
And you could become less competitive. So I think you do need to think a little bit about whether clients are VAT VAT registered.
Exactly. Yes, because for some, especially if the end user is not registered for VAT, they usually complain, well, actually, you've just hiked up the price and I wouldn't be able to get it back out, because for VAT purposes, it's more like an in and an out. So if it goes into that pot and I can't get it out, then I'd rather go with a freelancer who's not going to be putting anything into the pot that I can't get out.
Yeah, I think that's an important consideration. And the admin one's interesting for me, Kagiso. I remember when I started working as a freelancer, the VAT threshold was very low. I can't remember, it was like 300,000 Rand or something. And then it increased significantly, and I was now below the VAT threshold. And I decided to maintain my VAT, partly because my clients are all VAT vendors, but or VAT registered. But what I found useful was actually the admin, because it forced me to do because it's every 2 months, so you're forced to do your books. I think it's so easy as a freelancer to let the book slide, and the invoicing and the costs and the expenses and all of that just sort of, and you're scrambling every 6 months when you need to do something. So for me, sometimes the admin actually kept me, on the straight and narrow. But I wanted to ask you a further question on that. You mentioned about, if you register for VAT, you still have to now put in a nil return. So what if you hit that million mark threshold, you're forced to register for VAT, but then the following year you don't make a million? You maybe, that's the life of freelancers, right? Some years are good, some years are bad. Do you still have to levy an account for VAT?
So like I said, if once you're registered for VAT, right, you constantly have to levy VAT on your invoices. So to the extent that you feel like, well, I don't think I'm going to meet the compulsory VAT registration and I want to deregister, you have to submit an application to SARS where you basically explain that you don't think the compulsory VAT registration would be sort of like equating to you anymore, because you're not meeting that threshold anymore. SARS then has to consider that application and then notify you whether they agree with the cancellation. During that process, right, even though you're not meeting the threshold, before you receive the confirmation of cancellation from SARS, you do need to still be levying VAT and accounting for that VAT. So up until you get confirmation from SARS that the cancellation has gone through, you still need to be levying VAT and accounting for the VAT. The other thing is that once you've cancelled for the VAT, you can go and reinstate a VAT number. So if at a later stage you feel that, okay, I feel probably that I now meet the compulsory VAT registration and probably it's feasible for my business to do so, or you could meet the compulsory registration again and not necessarily the voluntarily. You can go to SARS, the same branch where you made the cancellation, and reactivate the VAT registration number.
Okay, and I actually went through this process, and this actually maybe Dumisa brings you in here. When I went from a sole proprietor to a PTY limited, and so I now earn an income from my business. So I had to go to SARS and say, well, I'm no longer a VAT vendor in my own capacity because I'm now an employee of my business. So at what point, Dumisa, do you make that move from being a sole proprietor to PTY limited? When does it make sense as a freelancer?
Actually, we had this discussion with Kagiso, and I said we tend to make this mistake in making this move purely looking at the tax benefit and looking at the fact that a company pays 27%. But if you look at the 27% and the PYE that you as the owner of the business have to pay, and the dividends that you have to take out, it actually does not work that advantageous, and therefore the decision to move from a sole proprietor to a PTY Ltd should be purely a business decision and not a tax decision. And we tend to find a lot of business people making a decision based on tax and forgetting all the administration that comes with it. I'll give you an example. You are now a South African taxpayer. You've been a sole proprietor. You've been doing your provisional tax payments. But now, the moment you move to a sole proprietor, it then means you are adding another taxpayer into the mix. You're adding the VAT administration. You are adding, because if you're still not registered from a SARS perspective, it means that you may be at a point in time for a couple of months having to submit VAT returns for both entities, which is yourself and the company. You now have provisional taxes for yourself and the company. You now have a PYE withholding obligation, which means that you have to do monthly EMP 201s and bi-monthly reconciliations, which are now going to a monthly reconciliation. So there is an added administrative burden that you are putting on yourself. So if there is really no operative need for you to go to a PTY LTD, I would not really advise just because you are looking at the tax rate, etc., because it effectively, it evens out, because SARS says, well, you pay yourself, you have to withhold PYE, you pay yourself dividends, you have to withhold 20%, and then the 27%. So is it really worth that much? And now you have to employ an accountant, because now you've got these two taxpayers who have all this administrative burdens that they have to comply with.
And let me tell you, banking costs go up significantly. So most banks offer sole proprietor, really, you actually basically you're basically paying bank fees for a personal account, or some of the banks have really low cost fees for sole proprietors. Go into a PTY limited, your costs, your banking costs triple. And I know that, I certainly from my perspective, the reason I did it was professionalization. I needed to professionalize. I had people employing people. I grew into a bigger business, but definitely I would say, not necessarily a tax benefit, certainly a lot.
It was exactly an operative benefit. It was
an operative decision.
Exactly. And this is what I always advise clients, in that if the business needs to be in a company and it needs to be formalized, then that makes sense. It should never, ever be just for the tax benefit. So do not ever make decisions just for a purely tax benefit, because you are a business. You're not in a business of saving tax. You're in a business of providing services. And if providing services through a company, that is what makes sense, because you're going to get more clients, then all well and good, go ahead and set up a business. But if you are still getting the same clients, but the only difference now is just you've put in a company, you've just added a second layer of administration with no benefit whatsoever.
Kagiso, do you want to add anything there?
No, I totally agree. It should never be for tax benefits, because you know your business and you know what your business needs. So that should be the number one priority.
And I think people also get caught out by this small business turnover tax. If you're a services company, which a freelancer is, you do not qualify for turnover tax. And I think there's this huge misconception out there about small business taxes and actually service companies. So I think that sometimes, Dumisa, gets missold to people because they don't understand it. Maybe give you 2 minutes just to explain that. Yeah.
Yes, and they get caught. When you tick that box when you're doing a tax return, that you're a small business and you're looking at the tax rates, which are very favorable. But then it asks you all the questions that, are you personally providing the services? Is more than 80% of the business being you providing the services personally? It kicks you out and says you don't qualify. But now you've already registered this company now. And what do you do with it?
Absolutely.
So it is very, very important. Like I said, it should never, ever be a tax decision, because it'll catch up on you.
Absolutely. And talking about catching up on you, I wanted to chat about a little bit of some tips to freelancers about managing their tax obligations, because I get so many freelancers coming to me saying a tax bill comes, they haven't made provision for it, and there's shock and horror. I know people who land up putting this on their credit card or taking out loans to pay the tax. And I think for some of them, what happens is they just, maybe there was some tax deduction happening. There was it maybe 25% taken off, and they assumed that was all the tax they were going to pay. So maybe explain, how the tax brackets work, and then maybe the three of us can give a few tips, both from experience, personal experience, and from you seeing what your clients do. So maybe just explain how the tax brackets work and why you can land up a little bit with that tax shock.
Yeah. So one of the most important things is that you may be a freelancer and you may be working for different companies, and each company may be deducting 25%, and because you're earning 500,000 from this one client. But if you have 4 clients that are paying you 500,000 and they've deducted 25%, ultimately what SARS does is that at the end of the year, you need to look at what tax bracket you are on. When it comes to South Africa, our tax bracket range from 18%, which is for individuals earning anything over and above 230,000, 238,000, up to anyone earning 1.8 million, and anyone earning over 1.8 million literally pays tax at 45%. So now you have these 4 clients. According to them, they've only paid you 500,000. They've withheld 25%. But according to your own income, you've actually earned 2 million, and you're actually in the 45% tax bracket, and therefore you've got tax withheld at 25%, but your actual final tax liability is 45%, and there is a gap of 20%. So what then it means is that firstly, if you are aware of what you will be earning with projections, etc., you can say to your clients, I would like you to withhold at 41% or at 45% to make sure that whatever income you earn that comes to you, the maximum tax rate has been paid, and you'd rather sit in a refund position. But really, because of the lag and the timing it takes to actually get your refund from SARS, I wouldn't advise anyone to say just take 45%. But if you know you may be in that bracket, but as a freelancer, you have certain expenses that you can deduct. So it is very important, like you say, the admin, because now, especially if you have that vendor, you can see what expenses I've incurred, you know exactly what it is. So when you do that, you say, this is what I've earned, and these are my expenses, this is what I earn every month. You multiply that by 12, you look at what bracket am I in, and that is the tax you are in. If you're in the 31% bracket and your client is deducting 25%, put a bit of another 6% on the side, just for every 6 months when you do your provisional tax return. Then you can pay it upfront. And the good thing is that you have to pay tax every 6 months. And if you are very accurate and within that 90%, you still have another period to do the top-up payment in September after the year has ended. So there is really no excuse, because if you're on top of what you are getting and your tax returns and your admin, you really should be in a position to understand what tax rate you actually belong to. And it means that then, and one of the things that is very important, because being on top of your admin, it means that you don't forget any expenses. Because Maya, you can forget that there was a point that my Wi-Fi was not working and I've had to go and work at a restaurant for 3 weeks because of load shedding. That was me in the production of my income, because I would not be able to have had this conversation with Maya had I not gone to a Mug and Bean and sat there the whole day to be able to conduct the interview. That is an expense, but it happened once or twice in the year. You'd forget if you don't do your admin on a regular basis.
Absolutely. I mean, collecting your expenses and your slips. I actually use OneDrive. So on my phone, I take a picture of it and I save that invoice immediately. So just a little tip. And the other thing I would always do as well is I'd always have I always just looked at the income. I didn't look at that expenses when I was trying to work out how much tax this would be. And I always made sure I had a tax account. So I put money away every month for tax and for VAT. So I had an account that I knew I could draw on when that bill came up. So, and I know it's tough, I know it's really hard when you're trying to make ends meet, especially as a freelancer, but you just cannot borrow from SARS. They're not a bank.
Definitely. I think my main tip from a VAT perspective is definitely knowing what your enterprise is and what your obligations are. And I know that tax can be very complicated, especially with all the terms that are used. And for someone like a freelancer, it's usually, VAT, it's charged by large corporates and doesn't really resonate with me. The biggest tip I would give is to say you need to determine what your taxable supplies are and know how much you need to be accounting for to SARS. Because to the extent that you do not account for your output tax at the time that you should have, there are, understatement penalties that SARS can levy, which range up to 200%, from 10% to 200%. And there's late payment penalties. And on top of that, there's interest. So it's very important for you to know what your tax obligations are so that you sort of run away from that understatement penalties. I wouldn't want to pay understatement penalties at 200%. And you also need to remember that ignorance of the law is no excuse. So unfortunately, you can't say to SARS, I didn't know, and therefore, please pardon me. There's also reliefs through the voluntary disclosure program, which is a program that SARS and Treasury introduced in order to ensure more VAT compliance. So this is to encourage taxpayers on a voluntary basis to approach them and say, oopsie, I found out that there was a tax obligation that I missed. And here I am now, I want to make things right. So what that does is that it mitigates the understatement penalties as well as the late payment penalties that you would have gotten had SARS audited you. So if you go on a voluntary basis before SARS audits you, then they can at least pardon you. Unfortunately, the interest will still be levied.
And the tax. So this is important to
Yes.
understand. So if you have not been declaring your tax, maybe you were just hoping no one would ever find out that you were earning money from all these people, except they, of course, report through to SARS. So you now get nervous. You can go to SARS and say, listen, I haven't been declaring my income. And they would still say, okay, let's look back over the last few years. If you had have paid us tax, you would have owed us 100,000 Rand, as an example. Plus interest, but we're not going to tax you. We're not going to charge you any penalty. So that's what it would be.
Yes,
Tax obligation
exactly.
plus interest. Okay.
Yes. So if they then say that your liability to register for VAT was in 2019, they would then look at those suppliers from 2019 when you were required to be registered. So for VAT purposes, you are a vendor if you are registered or required to be registered as a vendor. So you can't say, well, I wasn't registered, but you had triggered the threshold then. So they will look at all those amounts from 2019, see what you should have actually paid them, and then you would have to pay that tax over with the interest, obviously them waiving the understatement penalties and the late payment penalties because you've come to them on a voluntary basis. It's a different story if they find out through the grapevine and then now they have an audit. Then it's not deemed to be voluntary anymore. They say you were prompted by the audit that we started now, and this is why you're only coming forward to say, this is what I should have actually declared to SARS.
Kagiso, I want to clarify that. So if you triggered the R1 million threshold and you didn't charge VAT, you still have to pay that. So
yes.
They're just saying, well, we're assuming that R1 million was actually including that. So you're now out 50% because you haven't charged your clients that.
Correct.
I didn't realize that.
And unless you have clients that are willing to sort of say, oh, oopsie, here it is. But chances are it never really happens. So you then end up actually being in a negative position.
Sure. Very important thing. Dumisa, do you want to add anything on the
on the voluntary disclosure as well? What Kagiso also need to say is that SARS also asks what was the behavior that led to you not actually being compliant, and if SARS has found that this is something that you've been doing for a number of times, and you wait every 5 years and you come to us and say, oh, oopsie, and oopsie, is a repeat offender, and the penalties will kick in. And if, for an example, SARS believes that you took a position that you should not have taken because you had no reasonable grounds to take this position, for an example, is to say, I earned just by 2 rands of R1 million, but the threshold is R1 million. It is very clear. The threshold is R1 million, and you say no, 2 rands is not significant, but compulsory, you should register for VAT. And that is a behavior. So SARS also looks at the behavior, because when they come back with the decision to say, okay, we're going to accept your voluntary disclosure, tell us what is the behavior that led you to not pay us our tax when it was due. So you have to justify why you did not.
That's interesting. I actually had to go and make so I was before, when I was a sole proprietor, I was a provisional taxpayer, but now I'm a PAYE earner. I haven't deregistered as a provisional taxpayer, and I got a note to say you are no longer a provisional taxpayer. But I submitted my tax return late because on that basis, because I have longer. Remember, you have longer as a provisional taxpayer than regular taxpayer to. And I went back. I said, sorry, I didn't know. And they said, oh, okay, we'll let you off this time, but obviously not going to let me off next time. So it is, I haven't found them to be extremely stringent, but I suppose they look at behavior. This is a person who generally is compliant and misunderstood, because this provisional thing can be quite tricky. So, and I got a thing my mom has to register. We won't go into, this is specifically around freelancers. My mom is a pensioner now. They said, well, she should be a provisional taxpayer, and she earned a lot of income last year. She should have been paying, but they're giving her a year's grace. So, I mean, they are quite understanding, as long as, of course, you've got a track record of
yes, and exactly that, Maya. In that there is law that in one of the instances that it says we will waive the penalties if it's your first instance and you can prove that, and then SARS can look at your track record that we've never had the problem with the taxpayer. This is indeed the first time. They don't even have to ask for the behavior. We can say, well, I wasn't aware, and this is the first time, and then they will just waive those penalties. They can waive those penalties, and proving first instance is very easy because they can see your track record and that you've always been compliant. So exactly, and in certain instances, if it's things beyond your nature not to comply. For an example, when it was you were in an accident and you were in ICU, there was no way you could have done your tax return, and those circumstances, SARS would actually, even if they've penalized you and they found that you were not compliant, they would actually be amenable to reverse those penalties. So as we see them as the big bad wolf, but they are indeed, there is actually laws and provisions. And for an example, if a bank crashes and you can't make the transfer, those are the things that are embedded in law. It's not SARS' decision. They've put, as SARS and National Treasury, they've put that in law to understand that we live in a world that certain circumstances can prevent someone from complying.
And this is why it's important for taxpayers to remember that as much as, yes, there are laws that enforce SARS to do certain things, there are laws that safeguard them as well. For example, Dumisa mentioned exceptional circumstances. Surely you can't be forced to pay something if it was way beyond your control. So there are provisions that actually safeguard taxpayers as well.
And on that note, as we wind up, is there any one tip that we haven't covered that you really just want to say, having worked, your experience of working with freelancers? Do either of you have kind of something we haven't covered that you feel is absolutely burning?
I think we've covered everything, and Maya, and I think you mentioned one thing that I would emphasize to freelancers: be on top of your admin. It not only ensures that you're compliant, it can also ensure that whatever deductions that are allowed to you by SARS, you can actually take advantage of those, and thus minimizing your tax burden.
And the problem is that
your admin.
Yeah, is that often freelancers are creative people and they're just not admin oriented. So maybe it is a good idea also to look at getting a tax practitioner in or something. My husband is my financial guru. He's an accountant, so he does my taxes. I'm very lucky. But I would say that is probably the number one, the most difficult thing, is being on top of the admin. And you, Kagiso?
I definitely concur. I think the most important thing is probably just scheduling a meeting with a tax consultant and knowing what the story is. Like I said, ignorance of the law is no excuse. So you sitting and not finding out, unfortunately, will not save you when SARS comes knocking on your door.
No, absolutely not. Well, I want to thank both of you. And I also wanted to say to our listeners, if you found this interesting and there's some questions you have, please pop them in and we will, maybe I can get Kagiso and Dumisa to answer them, or maybe even we get enough questions, we'll do another Q&A podcast. So I really appreciate both of your time. I think you're giving us a lot of insight as freelancers, to stay on the right side of the tax man. So thank you.
Thank you so much for having us, Maya.
Thank you, Maya. It was a good discussion.
Kagiso, what was making me think about that voluntary disclosure program and that was the PPEs during COVID, where suddenly I've been getting a lot of press releases from SARS about them going after people who were not VAT registered. Maybe just explain, because I think that also happened to uncover some of the corruption, but what actually happened there?
Yes. So essentially what happened during COVID is that people randomly obviously got tenders for supplying the various PPEs. So you're providing goods, and to the extent that you meet the 1 million threshold, you're required to register for that. And obviously those tenders some were like for 3 million and whatnot. So immediately you would exceed the threshold. And some of the contracts would stem for a period of 3 years, 4 years. And for VAT purposes, to the extent that you're providing an enterprise which is on a continuous basis, you should have been registered for VAT and you should be accounting for VAT. So what happened with them is that they thought, well, I'm not registered for VAT. Here's a tender for 3 years. Then don't register for VAT. And that means already they've underdeclared VAT to SARS and didn't levy any VAT. And this is why SARS would obviously go back to such people and say, you've been conducting an enterprise actually probably for the past 3 years. Where's the output tax that you should have actually declared to us at the time, because you've been conducting an enterprise on a continuous basis.
Okay, so that is interesting. It explains also why it's so important to make sure you register for VAT.